Hey guys, welcome back to the channel McNallie Money, home of all things stock, investment, and personal finance related. Now for today's video, we've got a really special one for you. We're going to be joined by the CEO of Kontrol Technologies to talk about his business in a little bit more detail. Before we get into that though, please take a second, hit the like button, you guys. It's a big help to myself and the channel. If you're not already subscribed, McNallie Money, feel free to join. And let me know in the comment section below if you're currently holding shares of Kontrol, what you think about this company, and how you think they stack up to some of their competitors moving forward. Now let's get into today's video. Okay guys, so that's right. Today's video, a really special one for you. We've got the director and CEO of Kontrol Technologies here joining us to answer some questions. Paul Ghezzi. Paul, thanks so much for being with us today. Really looking forward to this discussion.
Yeah, great to be with you. Thank you.
Perfect. So we'll jump right in. For viewers who are unfamiliar with the KNR Kontrol Technologies story, I know we've covered it a few times on the channel. Can you give us a high-level summary of the company and your current operations?
Sure. So we're in the smart buildings business, which includes energy management and emission monitoring. And if you think about it from a future perspective to where we are today, if every building and every operator says they're going to be net zero in 2030, 2050, there's really kind of two fundamental verticals they have to work on. They have to optimize their energy consumption demand, which includes adding technology. And they have to manage what's going up in the air through a process or a facility, which is the emission side. So when we started our journey 6 years ago, really the concept was governments were moving away from large renewable energy projects, which is true, and shifting their emphasis towards buildings, which is also true. And you can see where the policy is going. So in that kind of two verticals, we cover what we call the commercial sector, which would be like downtown buildings and apartments, residential. And the industrial sector, which would be large emitters, oil and gas companies, RNG, anyone putting something up in the air.
Gotcha.
So we've got a really good platform of delivering and executing in those two verticals.
Perfect. Yeah, and I'll leave a link to the company website in the video description below, but I would encourage viewers to go in and take a look because it is definitely cutting edge, very interesting stuff here. Now, on that theme, I guess, Paul, what would you say is the key differentiator for Kontrol compared to other energy management operators?
So definitely the industry is vertically integrating, and there's a big trend. And if you look at companies like Honeywell, Johnson Controls, Ameresco, they would kind of be the behemoths, the global giants in the industry, and they're vertically integrating. So what that means is if you have a building and that building is 1 million square feet in size, the way you grow is by getting more buildings, but also you grow within the building. So providing a better service platform, a better solution platform. As an example, HVAC represents about 70% of energy consumption. If you're not dealing with that as a solution, well, you're missing a big chunk of the building. So I would say what we've done in our approach is to vertically integrate our solutions and not compete at the national or global level, but compete regionally. So generally we're competing against smaller companies that don't have a vertically integrated platform. So I think that's one important differentiator. The other is pushing your own technology, developing your IP, your patent portfolio, what you can move in that building. And that's something I think we've been pretty successful at in terms of where we are today.
For sure. And just as a reminder, you're operating currently Canada and United States, correct?
Those are our two principal markets, correct. But we have now opportunities expanding beyond that. And we'll talk about that as we get into some of the recent press releases.
For sure. Okay, so thanks for the context there. Now, you alluded to this a little bit, some of the government mandates, regulation, but what is really the market opportunity for this? Obviously, there's tons and tons of buildings and high-rises and everything in cities around North America. What are some of the big tailwinds for this sector?
Sure. So if we think about, if we separate buildings into Class A and Class B, the Class A buildings are probably the ones we're most familiar with. You go downtown, there's a massive tower, and that tower, looks like it's moving towards technologies becoming more sophisticated. Then you have the Class B market, which is actually much larger than the Class A market, and there's been a lack of technology, a lack of investment, a lack of modernization. So the Class B market on an energy management side is about $100 billion a year addressable market.
Wow.
And then if you take the emission side for industry, you double that. So it's about a $200 billion annual addressable market that we're working into. And really what it comes down to is scaling with your customers, finding new customers, adding your technology in buildings, And that's really where 2023 is really about organic growth, focusing on that. We could talk about 2022 when we get there. But the idea is if we can scale with our customers and grow faster with them, in addition to acquisitions, that's an important lane to be looking at in 2023.
Perfect. Yeah, and we will talk about 2022 results next up here, and then some of the catalysts for the back half of 2023. But I realize you guys just put out your Q4 2022 year-end results, I think about 5 days ago or so. What were some of the highlights out of that, Paul?
Okay, so this is going to take a couple questions between us because it's a little complicated, but
sure.
Essentially we had a non-performing operating subsidiary that was announced in Q3.
Okay.
And they did very poorly, started to lose money. And, really you have a couple choices in this environment. And you and I talked offline a little bit about how other small caps address this, right?
Yeah.
So our view was you have a specific choice. Do you continue to fund operating losses to turn the tide? Or do you make a decision and stop operations, stop the bleeding, and focus on your profitable businesses? So I would say 3 years ago, it was really easy for microcaps to raise capital. It was a different time, right?
Yeah.
I would say now what you're seeing in the market is lack of liquidity, lack of capital. You really have to make tough choices about being profitable and to get to profitability as fast as you can. So we made the choice to eliminate that division. So that created a really big write-off in 2022 Q4.
Okay.
The challenge in understanding that is the discontinued operations cover 2 quarters. So in Q1, we're going to have a really big gain. Ideally, that would have happened in the same quarter. The two would have netted each other out.
Sure.
So, if you look at 2022, big loss in the quarter. Now coming into 2021, 2023, we're going to have roughly a $24 million gain, which represents the removal of the liabilities.
Gotcha.
So, a little complicated, but I would say if you think about the business, 2022 is in the rearview mirror. What are we doing in 2023? So we're operating EBITDA positive to start the year, which is great.
Yeah.
Focused on profitability. We'll have this gain come in from the accounting perspective. And 2023 is going to look like a much stronger year than 2022.
Okay, great. So you're feeling confident. Yeah, sometimes the accounting principles kind of work for or against, but at least, like you say, that one's behind you. And yeah, talking about 2023, sounds like it's exciting. You've got a lot on the roadmap. What are some of the kind of big focal points of the company right now?
For sure. So I would say, look, we always have to think of the context of the market, and it's not something we want to shy away from. I would say these are probably the most difficult operating conditions for microcaps in, let's say, the last 20 years, right? And generally in these environments, the most important thing is to be a self-sustaining business. So can you generate your own cash flows? Can you generate profitability? Can you pay down your debt? And can you build your business? And if I summarize that, those are really our key objectives, right? So profitability drives cash flow drives paying down your debt, drives investing in the business, and means that you don't have to raise capital. Mm-hmm. And if we can get through 2023 with those key objectives, I think 2023 is going to look like a strong year, relative to history. And as we know, the market's always future looking, right? The market's always trying to figure out where you're going. So I would say those are really our key objectives.
Okay, great. Yeah, and I would agree with you, Paul, for sure. From a retail perspective, it's been a very difficult market for nano and small caps. But like you say, that should turn at some point here, and if you're making money, that's an even better case for an investment thesis. So number one focus right now, you would say, is profitability in year.
For sure, that's right. That drives everything.
Okay, great. And in terms of your client base, do you have any big new portfolios or new deals on the horizon? Can you share anything there?
Yeah, so 2 things. We have a really well-established blue chip customer base on the industrial and the commercial side. Typically when we onboard a new customer, and what's happened to us in the past a few years ago is we had mentioned a customer's name, and immediately a number of our competition were calling them.
Okay.
And so you have to really be careful. And, it's hard for large companies to deal with small companies because of some of the baggage that comes with that. So when we onboard a new customer, we will typically say the customer and operates in this industry, but not name them. So most recently, we named a Fortune 100 customer with about 40 billion of annual revenue, has selected us to be part of their energy management optimization solution for a very large facility in Ontario, about 1.6 million square feet.
Wow.
And I would say that took about a year to put together.
Okay.
They've got thousands and maybe tens of thousands of buildings across the world that they touch. And so this is an opportunity for us to get into one very specific challenge they're trying to address and using our technology. and how do we scale that with them? So that's always the question we ask is, it's nice that we're going to do this project together. What's the future look like? And if there's no future, we tend to say we're not really that interested, because the one and done is we're spending money to get into that, and then there's nothing else.
For sure.
We've got another really two strong opportunities on the emission side. One is a European manufacturer of emission equipment that's quite large in Europe, been around for 30 years, very successful. They have a very low presence in the US, Mexico, and Canada. So we're developing a master distribution agreement with them to co-own a company that will be their primary focal point. And that could be a very large win for us. The other one we're working on is we're actually helping one of our US customers manufacture a new technology for emissions. And they selected us because of our long pedigree in integrating emission equipment into facilities. So we've got what I would call these very large opportunities percolating on top of a business that is high margin, lower revenue than last year because we got rid of our loss-making operations. But I would say this, if you can demonstrate that you're profitable on your revenue and you can show a path to grow that revenue, that is a much better place to be than being a high revenue company that's going to generate losses for 3 years.
Agreed.
Because the market does not want it. Like that's where we are, right? And we can complain about it, which I do, but if you thought about 3 years ago, interest rates were 0, companies were burning through cash. Now interest rates are 7, 8, 9, 10%, the prime rate plus the lending rate. Companies aren't allowed to burn cash anymore. Companies that are really burning cash are getting taken to the woodshed, penalized, right?
For sure.
So I would rather be in this position and have that turn when the market sentiment turns than really be hemorrhaging losses for the next year or two. So I think if you're a microcap, that's the worst place to be, honestly, is you can talk about revenue growth, but if you're not making money in this environment, it's going to be very challenging. And that's just my personal opinion. I don't know if you agree with that.
I'd for sure do it. Any business, right? It doesn't matter how much you're bringing in on the top line. If you're not keeping or profiting any of that, it's tough to have that staying power to kind of hold out in this type of market. So, thanks for sharing those bigger clients. Now, the Fortune 100, would that represent the largest client so far for Kontrol?
In terms of overall revenue and scale, they would be the largest.
Okay, great.
No,
and that one's
it's not the largest project we have. It's one building, but we're in one building with the largest customer in our platform.
Yeah, amazing. Okay, well, that's great to hear. And Paul, the last question for you, I just wanted to see if you had any final thoughts. If viewers want to find out more about the company, what's the best way to do so? I know we'll obviously leave a link to the website, but any closing thoughts for us here or people who are looking for more information?
So for sure. So I think one of the things that gets discounted about Kontrol, which I find interesting, is we built up a pretty good patent portfolio of technology, and we keep adding to that. So I would say BioCloud is an example. BioCloud is, part of the technology build out that's become what I would call the underlying technology platform for controlled biowater, which is viral testing in wastewater. And we anticipate those patents will be coming in. So it's about a 2-year process to go from filing to patent. So we anticipate those patents will be coming in. And I would say there's something, investors should think about is we are growing that. We think there's value there. Whether the market recognizes that value today or not, it's not up to me to decide that.
Okay.
But we are growing this technology platform. So we're interested in, kind of continuing to grow that, develop it, create value for shareholders. And keep that in mind as part of, being an EBIT positive operation that we think is going to have a good year. And we're here to fight, for shareholders because we're the largest shareholders. And tough markets don't last. Good companies do, and we're here for the long term.
Great. Yeah, and I recall in some of our prior coverage on Kontrol Technologies, I would encourage you guys to go back and watch some of those videos if you haven't, but there is a large portion of this company that's held by insiders. I believe that's still correct, Paul?
Yeah, no, still correct.
Well, yeah, and I always like to say it's great when you see management with skin in the game, right? It's a big vote of confidence. So, Paul, thanks so much for your time today. We really appreciate you coming on here. It's great to get an update out about this company. I'll leave a link in the video description below. If you guys have any additional questions that we weren't able to touch on in today's video, feel free to drop them in the comments and we'll make sure Paul or a member of his team gets back to you. If you're still watching the video at this point, hopefully you found some value. So make sure you hit the like button. And if you're not subscribed to the channel, McNallie Money, feel free to join. Paul, thanks again for your time today. Great conversation and looking forward to having you back in a few months here.
Thanks for your time. Have a great day. Thank you.
Take care.